Price fluctuations in silver, like the ones we're witnessing today, are far from ordinary, yet such movements have almost become the norm. However, the current trends in the precious metals market, particularly with silver, are anything but typical. I'll discuss what's happening in the markets today and explain why this surge in silver prices is likely not the last we'll see. Officially, I've been bullish on silver for some time, a sentiment shared by many analysts. However, it's important to acknowledge that predicting the future price of silver is uncertain, and the metal has historically disappointed, which is partly why the gold-to-silver ratio has remained so high. This ratio is expected to stay elevated, but let's dive deeper into this and the prevailing bullish sentiment later. First, let's review today's market activity just before closing. Silver's price soared, nearly reaching $29, with an increase of 94 cents, or 3.38%, settling at $28.88, just 12 cents short of $29. Recall that silver touched $29 last Friday before retreating sharply. Meanwhile, gold also rose by $40 today, a 1.71% increase, bringing it to $2,383.19, which is just shy of $2,400, a figure we might see again soon. In contrast, platinum and palladium are down, and rhodium has gained $50. The gold-to-silver ratio now stands at 82.8, which we'll explore further shortly. But first, let's delve into why the market sentiment for silver is so positive. Notably, silver has seen an impressive increase this year, rising over 20%. This is certainly big news and a cause for celebration for those who have been eagerly awaiting such a move. However, if you are considering buying silver, you might prefer the prices to drop so you can purchase more. There are many of us who value the metal regardless of its price. I count myself among this group, even though it has been frustrating to see the price stagnate at times. This year, I want to remind everyone that the true value of silver and gold transcends their market price. Price, after all, is merely a metric used in trading markets, predominantly measured against the dollar. But what is the dollar? Essentially, it is a Federal Reserve note founded on debt. This note, legal tender for all public and private debts, has been a debt instrument since the Federal Reserve Act was introduced on December 23, 1913. Since then, the dollar has lost between 98 and 99% of its value. A dollar from that era is now worth about 2 cents. Consider this: silver has not only kept pace with this depreciation but has, in many ways, surpassed it. The metal maintains its value far better than many expect, and it has generally kept up with inflation. Of course, there are exceptions, and the true value of silver can depend on how and when it is purchased. Ultimately, investing in silver is about wealth preservation, which is highly personal and varies from one individual to another. There are significant risks and opportunities when it comes to investing in silver, which is why I focus on showcasing just the bars, whose value largely reflects their weight, excluding rare exceptions. This year, we've witnessed a notable 20% increase in silver prices, a cause for celebration and certainly out of the ordinary. So, what's driving the bullish sentiment in the silver market? Much of it can be attributed to psychological factors. Typically, when gains like these are seen early in the year, market sentiment tends to shift toward optimism. This bullish trend is supported by reports indicating an undersupply in the silver market and increased volatility in the precious metals sector overall. Recently, silver has begun to outperform gold, as highlighted in a new report from commodity analysts at ANZ. They noted that despite facing solid resistance, silver still holds significant potential for growth, having nearly touched $30 just this past Friday. Meanwhile, the gold market has seen some consolidation at the beginning of this week, and the gold-to-silver ratio has continued to decline sharply, currently at its lowest since last December, now at 82. Analysts predict that gold might reach near $2,500 an ounce and silver could climb to $31 an ounce by the end of 2024. At this stage, these predictions are realistic, expecting the gold-to-silver ratio to stabilize around 80 by the year's end, after peaking at 91 in February of this year. According to Daniel Haynes, or Hines, and his team at an Australian bank, they have revised their gold and silver price forecasts upward through 2024 and 2025. They anticipate these changes as key market drivers such as anticipated rate cuts and a weaker dollar have not yet occurred. Meanwhile, geopolitical tensions in the Middle East seem to be easing for now, following the interception of a rocket and drone attack by Iranian forces, largely thwarted by Israeli and U.S. defenses. Some analysts believe that this reduction in geopolitical risk diminishes the safe haven demand for gold, while bolstering silver's appeal due to its industrial applications, potentially narrowing the gold-to-silver ratio slightly. However, the predictions still place the ratio right around 80, a figure they see as a new normal. On days like today, with silver significantly outperforming gold, if this trend continues and silver reaches prices of $31 or even $32, we might see the ratio drop to the mid to high 70s, which would be a welcome development. There's also a noticeable increase in industrial demand for silver, enhancing its role beyond just a monetary metal. Haynes expects silver to outperform gold as industrial demand increases and supply remains tight. Notably, India has been importing record amounts of silver, and there are indications that China may also be shifting more toward silver. Reports have surfaced about some of the gold bought in China being counterfeit, which I plan to explore further in an upcoming video after more research. So, you need to be cautious, and they also need to be careful. There might be a shift toward silver, which is less likely to be counterfeited. However, it's important to note that there is also a significant amount of counterfeit silver in the market. Slower mine production growth combined with strong industrial demand suggests that supply is falling behind demand, which will maintain the market in a structural deficit. An upswing in the electronics cycle and potential demand growth from the solar sector bode well for silver's industrial consumption, although some reports, like the recent one from Heraeus, indicate that this demand may be normalizing or even diminishing somewhat this year. There are numerous factors at play. An undersupplied market allows for further depletion of above-ground inventories from the London Bullion Market Association and other exchanges, which I've covered previously on this channel. It's fascinating to see how all these elements come together. I believe there is, at least to some extent, pressure from COMEX and LBMA, primarily driven by India. We'll see how this unfolds. Persistently low stocks along with a negative market balance suggest that higher silver prices are warranted. Many feel it's long overdue. We've been waiting for a significant breakout in silver prices, which hasn't quite happened yet. Could that change? Absolutely. If we start seeing more days where silver's price jumps by $1, it would indicate a major shift. The question remains, how much volatility will accompany such movements? You're going to see what I'm calling snapbacks in the market. These are very quick, reactive price movements. Many attribute these snapbacks to market manipulation when prices plummet, but not when they shoot up dramatically. For example, consider today's sharp 3.3% increase in silver prices. It's a significant surge, and surprisingly, few mention manipulation in these instances. However, it's important to note that there's heavy trading volume during these times, which could potentially be manipulative as well. As I'm reviewing the charts now, trading volume has decreased, but we're approaching the end of the trading day, and prices are starting to dip slightly. Here on this channel, I aim to keep you updated with the latest market news and insights. If you find this video helpful and informative, I hope you'll consider subscribing to the channel, liking this video, and engaging with our content. I'm grateful for each viewer and encourage you to rate, share, comment, and subscribe. Thank you for your support and for taking the time to watch.